Hello everyone, I'm going to teach the chapter Financial Inclusion, then Development of Digital Payments and Evolution of IT in Banking Sector. These three are very small chapters and these are mostly needed for descriptive writing. So let's see. Basically, first we have to know that subsidies given by the government are not a part of financial inclusion, but the subsidy returns are. So, like, yeah, that is all. It is understandable. And now some facts are that according to Government of India population census of 2011, only 58.7% households were availing banking services, and they only 65% of adults were availing banking services. According to CRISIL Financial Inclusion Index, Inclusix, in February 2018, it identified four parameters for financial inclusion, which were branch penetration, credit penetration, deposit penetration, and insurance penetration. Branch, credit, deposit, and insurance. Uh, it ro- it said that financial inclusion rose from 50.1% in 2015 to 58% in 2016, and Kerala has the highest score of financial inclusion, and Manipur has the lowest. And in India, 14 districts have financial inclusion score of 100, and overall India score is 58%. And according to IMF Financial Access Survey results, it covers 189 jurisdictions with more than 100 data series and historical data from 2004. Now, for 2030 Sustainable Development Goals, there should be two indicators for financial inclusion measurement. First will be the number of commercial bank branches per 1 lakh adults and number of ATMs per 1 lakh adults. Okay. Now, what are the causes of not up to the mark financial inclusion? First will be lack of surplus income among people. Second would be not that the financial services are not very suitable according to the customer requirements. Third will be the lack of requisite documents or from required from the customers. Fourth will be lack of awareness. Fifth will be lack of trust in the system. Sixth will be high transaction of cost. Seventh will be remoteness of the service. And eighth are poor quality of services. Now, some of the recent measures taken in financial inclusion are: first is National Center for National Financial Education and CBSE collaborate for financial education workbooks, which were issued for class 6th to 10th. Also, RBI initiated financial literacy projects. Also, framework for grade certifications or trainings for BCs were given. Uh, Fourth were the licensing focus on rural areas. Any agency for license has to open 25% of branches in rural area. Like any agency asking for fine license, I think for opening of banks, has to open at least 25% of branches in the rural areas. Fifth is establishing of payment banks. Sixth is small establishing of small finance banks. Seventh is opening of minor accounts. Eighth is introducing Pradhan Mantri Jan Dhan Yojana. Ninth is Jan Aadhaar Mobile Trinity. Tenth is government flagship initiatives. 11th is promotion of digital payments. Like RBI created DPI index to measure the level of digitization nationwide based on five parameters, which contain 28 indicators. And this DPI index is published semi-annually since March 2021. National Strategy for Financial Education (NFSE) NSFE. It recommended 5C approach for financial inclusion: content capacity community communication and collaboration. Also, financial inclusion should focus on lending to the priority sector. Now, what are the objectives of financial inclusion? First is universal access of financial services to all, providing basic bouquet of financial services to everyone, access to livelihood and skill development, financial literacy and education. Fifth is customer protection and grievance redressal, and sixth is effective coordination. Now, what is the role of IT in financial inclusion? It can be many, like financial services through mobile, smart cards and POS terminals, biometric handheld device, internet-enabled kiosk, and micro, mobile, and biometric ATMs. Now, what are the challenges for financial inclusion? Some are non-universal access to bank accounts, digital divide among people, inadequate infrastructure, and socio-cultural barriers, and also payment infrastructure like inadequate payment infrastructure. Now, what is microfinance? Microfinance means giving financial services to low-income clients and poor people with the goal of creating social value. It is done with the help of NGO and self-help groups. Now, role and importance of microfinance is it gives credit to rural poor people. It creates helps in poverty alleviation. It helps in women empowerment. It generates economic growth. It helps in mobilization of savings. It also helps in development of skills, and it is it creates a mutual help and cooperation. Now, what's the issues in microfinance? Like generating funds and regulating those um, all these financial services is can be tough. That is all. Next is development of digital payments. Now, prior to demonetization, only 10% of the payments were digitalized. Now, all, okay, now so NPCI, NPCI, it is an umbrella organization. It is formed by RBI and Indian Bank Association under the provision of Payment and Settlement Act 2007. It was incorporated in December 2008 and it started its business in April 2009. Now, what are the major digital payments? What were the major digital payments till 2010? First would be NEFT. It is National Electronic Fund Transfer. It is managed by RBI and there are no minimum or maximum limit for transfer. And it is open 24 into 7 every day. And settlement cycle happens in every 30 minutes. So within 24 hours, there will be 48 settlement cycles. No charges are taken, but after 1st January, okay, no charges are taken after 1st January 2020. And if transaction is not credited even after 2 hours, the bank have to pay a penal interest. And NEFT is done with IFSC code. In IFSC code, the first four characters are represent the bank. They are known as the alpha characters. Then there are zero, and then the last six characters represent the branch of the bank. Next it would be RTGS, real-time gross settlement. It is also managed by RBI, but it has a limit of minimum 2 lakh, and it is also available all the time. And there are no charges as well, and also it isn't there is no settlement cycle of 30 minutes. It happens in real time. Third are credit and debit card, and fourth is electronic clearing system. This electronic clearing system service can be for credit or debit. For credit, can be for bulk and repetitive payments like salary or like um, this kind of some subscription on anything. For clearing debt, I think it is for paying electricity bill, and there is also no amount for payment, like no limit on amount of payment. Now, after 2010, the major digital payments were first is IMPS. IMPS means Immediate Payment Service. It was created by NPCI in 2010 and there is no minimum limit and maximum limit is of 5 lakh. It is available all the time. It is also real-time service and no charges are taken by NPCI. But different charges, different banks do charge different amounts and it can be either P2P or P2M. So P2A, like phone to account or phone to phone. Second would be RuPay debit card. It was done by NPCI in 2012. It is a competitor to Visa and MasterCard in India, and there are lesser processing fee and no quarterly payment or no entry fees there. Third is USSD, Unstructured Supplementary Service Data. It was done in 2004 by NPCI. For this, with the code of star 99 hash, we have to dial in our phone. It connects the telecom operator to our bank server, and National Unified USSD payment is used, and then you can pay. Now, fourth is AEPS, Aadhaar Enabled Payment System. It came in 2016. It was run by NPCI. Therefore, for this, you can do four basic functions, And first is balance checking, mini statement, cash deposit, and cash withdrawal, and Aadhaar to Aadhaar fund transfer. Fifth is UPI. It was also done by NPCI in 2016. For this, 1 lakh is the limit for normal transaction and no charges there for customers. After April 2023, the for business owners having payment of more than 50,000 per month uh, for transaction more than 2,000, like uh, okay, so if business owners have a payment of more than 50,000 per month, so for transactions which are more than 2,000, they have to pay interest of 1.1%. And okay, now this kind of interest will be there when our payment is done between two different wallets. That's all. If it is done between same wallets, then won't be done. Sixth is BHIM, Bharat Interface for Money. It is dedicated to Bhimrao Ramji Ambedkar. Seventh is BBPS, Bharat Bill Payment System. It is done for repetitive bill payment system. Eighth is NET's National Electric Toll Connection. It was done in 2016 December by NPCI as well. It uses FASTag as a payment mode for any toll throughout the country. Ninth is NAC, a National Automated Clearing House. It is just same like ECS, but it is faster and also better. 10th is Bharat QR code. It was done in September 2016. 11th is NCMC, National Common Mobility Card. It is a card like which is One Nation One Card initiative. It is the initiative of Ministry of Housing and Urban Affairs. It would enable endless traveling across metros and other transport throughout the country with a single common card. 12th is UPI Lite. Maximum UPI transaction of 500 rupees is allowed. No internet connection is required for this. And maximum balance limit of rupees 2000 is allowed. And this rupees 2000 can be added to the account twice daily. And also, no PIN is needed for this. 13th is UPI 123 Pay. This is for featured phone users. 14th is UPI AutoPay, 15th is eRupee, 16th is CBDC. CBDC is Central Bank Digital Currency or Digital Rupee. 17th is prepaid payment instruments. Now, steps taken by government for digital payments are basically demonetization, DigiDhan Mission, Digital India Mission, DigiShala, and Digital Payment Utsav. Now, steps taken by RBI are institutional building, standardization of technology, promotional steps, customer protection, and regulation and supervision. Some of the other steps are like increase in internet and smartphone penetration, rise of e-commerce, penetration of Aadhaar, emergence of payment aggregation, and third-party application providers. Now, for Payment Vision 2025, our vision is e-payments for everyone, everywhere, every time, which basically means four E's. We have six visions under it. First is volume of check-based payments should be less than 0.25% of total retail payments. Second is UPI should register an average annual growth of 50% and IMPS or NEFT should generate a growth of at least 20%. Third is increase in debit card transactions at the point of sale by 20%. Fourth is increase in PPI transaction by 150%. Fifth is card acceptance infrastructure should be increased by 250 lakh. Sixth is increase registered customers base for mobile based transaction, increase in registered customer base for mobile based transaction by 50% CAGR. Now let us look at the evolution of IT in banking sector. In phase one, from 1980 to 1990, it was a period of mechanization. In it, magnetic and character recognition (MICR) technology was introduced. For phase two, 1990 to 2000, it was a period of automation. In its core banking solution, CDS, electronic fund transfer (EFT), data warehousing, and data mining, all these were introduced. In phase three, 2000 to 2010, internet era it introduced online booking, telebanking, RTGS, NEFT, immediate payment service like IMPS, all this. Phase four is after 2011. First is biometric authentication was introduced, mobile banking, check truncation system, multiple digital payment modes. So these were the four phases of Indian banking system sector till now. Next is fintech technologies. These were the fintech technologies which are used in banking sector. First is AI, big data, application programming interface (API), biometrics, distributed ledger technology (DLT). What are the advantages for customers? Like they can do banking anytime. They have increased convenience. Approvals become speedier. One-stop solution for all problems. Increased financial inclusion and increased security and direct benefit transfer. What are the advantages of merchants? It creates an immediate settlement leading to high liquidity. There are low transaction costs. Yeah, there is reduction in risk associated with cash handling. Now, what are the advantages of banks? They actually reduce human intervention. They create high productivity. Also, they are low costly to banks, and better risk and credit control is there. Now, what are the laws governing financial technology in India? There are six laws basically. First is Payment Regulated through Payment and Settlement System Acts 2007. Second is P2P lending regulated through guidelines regulating P2P lending platform. Third is master direction on issuance and operations of PPIs. Fourth is NPCI guidelines regarding the UPI payments. Fifth is guidelines for governing payment aggregators or gateways. Sixth is fintech companies regulated through NBFC regulations. Now, what are the risks associated with fintech? First are concerns regarding data protection, then excluding the vulnerable sections of a society, then certain entities will create monopoly. Also, loss of jobs will be occurring, and scams like phishing, wishing, smishing, all this will be occurring. Now, what are the areas for future development? First will be more focus to cross-border payments. Then inequality should be looked at across all the sections of society, and obsolete IT systems should be checked, and proper training should be given to the staff. That is all for all these chapters.